Morning Blast. Mr. Michael Brown is already with us. Let's invite him to be co-host. I believe that worked. Let's just give it a second and see if it did work. Dum dum dum. Has he got the
Ryan, good morning, everyone.
Good morning. How are you?
I'm very well. I'm very well indeed. Although your CFO slash head of HR has been starting some nefarious rumours about the security of my position this morning.
Why? What's happened?
Well, the rumour is that I may be about to be replaced, according to him.
Who by?
God knows.
Oh, well, it's news to me.
It's news to me as
Okay.
well.
Yeah. Well, I'll get the legals out of the way before I get into even more trouble. Nothing discussed in this space is session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, Chains PIQ or PIQ Suite, or indeed the hosts, which will forever be Mr. Michael Brown, myself, Ryan Paisley. What's been
I
occurring?
noticed. Well, I was going to say I noticed Mr. Rich Bernard hasn't actually turned up this morning,
All
so maybe
mouth, no
he's
trousers.
hanging his head in shame somewhere.
Yeah.
Quite yes, right. Good morning, everyone. In terms of yesterday, then, I mean, unless you were living a rock for the last 24 hours or so, you will know, of course, that Donald Trump was sworn in yesterday as the 47th president of the United States, of course, becoming only the second man to serve two non-consecutive terms in the Oval Office. For markets, though, it was not the inaugural address or the vast number of executive orders that Trump signed that was of most interest, but instead what happened about 4 hours before the inaugural address, and that was reports via the Wall Street Journal, which was citing a memo that the Trump campaign, or I suppose Trump administration now, had put together, outlining that while Trump would lay out his, quote, trade vision on Inauguration Day, he will be refraining from tariffs at this stage. This memo was later backed up by Reuters and by various other reporting. And essentially, the nub of the issue is that the Trump administration, rather than coming into the Oval Office and straight away going, here's a load of tariffs on everyone, get to it, is instead going to direct various federal agencies to, and I quote again here, investigate and remedy persistent trade deficits, address unfair trade and currency policies by other nations, with a specific focus on China, Canada, and Mexico. Now, there's a couple of things that I would stress here. Firstly, the market reacted very, very positively to this news. The dollar rolling over by around about 1% or so, equity futures popping to the upside. Of course, cash, equity, and treasury trade was closed yesterday due to Martin Luther King Day. But I think the few takeaways I would take from this are: firstly, it is very, very plausible that these investigations are sort of ostensibly investigating these policies and will just result in a conclusion that says we need to throw tariffs on these countries anyway. And secondly, is it's important to recognise that just because there are no tariffs on day one of the Trump administration, that doesn't mean that there will never be any tariffs whatsoever
Yes.
during the other
Yes.
thousand odd days that are still to come in the administration. And as if to stress that point, overnight Trump was doing various bits and bobs, signing executive orders in the Oval Office, and he came out with a line that he thinks I'll enact tariffs on Canada and Mexico on the 1st of February. So of course that is just a matter of days away. We wait to see whether or not that does indeed come to fruition, but nonetheless, and unsurprisingly, we see the CAD and the Mexican peso trading a fair chunk softer overnight. In terms of other bits and bobs in the political realm, yesterday over in the United States, I really can't go through everything that Trump said in his inaugural address because we would genuinely be here all day. Of course, a number of measures announced in terms of immigration, mostly targeting what's going on at the southern border with Mexico. From a macro perspective, Trump has said he's going to direct his cabinet to defeat inflation and lower costs.
Wow,
If
easy.
only it was that easy, but good luck. On the energy front, of course, Trump repeating during the inaugural address his campaign slogan of drill, baby, drill. He also said, and this is an interesting line, we'll fill our strategic oil reserves right to the top. Now, if that does happen, the SPR in the US at the moment is about half full. So by my very rudimentary arithmetic, that would equate to about 300 million barrels worth of crude that the US would need to buy in order to top that up. So potentially one worth keeping on the radar. Trump also, as expected, revoking the electric vehicle mandate in the United States, confirming that the Department of Government Efficiency will be established. I do find it quite amusing, I must admit, that obviously here in the UK we've just had the Office for Value for Money set up to try and increase government efficiency. In the US, you've had this DOGE thing set up. Why is it that the way to improve efficiency is by setting up other quangos within government? I'm not entirely sure on that
Well,
one.
I just remember.
Trump also.
Sorry, just on that, I do
Oh, go
remember
on.
seeing a headline last night where the UK one apparently might not be value for money itself. So they might be scrapping
No,
that.
it's not. Yes, I wouldn't be at all surprised. The other one, just on that DOGE thing, Vivek. I can't say his surname. The other bloke who was meant to be running that with Elon Musk, he's now not going to be because he wants to run for governor of Ohio instead. And just in the geopolitical realm, Trump said that he wants to be a peacemaker during his second term. He then threatened to declare war on Panama by saying that they will take back the Panama Canal. And he also repeated that they want to change the name of the Gulf of Mexico to the Gulf of America. Overall, there was nothing particularly surprising in the inaugural address or in some of the executive orders that Trump has signed overnight. If you are interested in the full amount of those executive orders, I think the New York Times has got quite a good rundown on that. But I think perhaps in terms of day one, what Trump didn't say is potentially more important. It's obviously not my bag, but there was no particular mention of crypto in any of this, despite what some people have been hoping. There was also not much meat on the bones in terms of tax. And there was also not really any specific detail in the realm of tariffs either. So I think despite the fact that we are now, probably about three-quarters of a day into this session, there are still quite a lot of unknowns around the matters that are likely to be really on top of market participants' minds. Away from Trump and US politics, just very briefly, because yes, there are other things going on in the world. We heard from the ECB's Casimir this morning. After the hawkish Holtzman said yesterday that a rate cut in January is not a done deal, Casimir this morning said that yes, a rate cut next week is in fact a done deal. Nice to see the ECB demonstrating joined up thinking as ever. He also said that 3 or 4 cuts in a row are feasible, so clearly the ECB not planning to slow things down anytime soon. And a few bits and bobs just worth noting here in the UK. Firstly, the Prudential Regulation Authority over at the Bank of England, they are looking to simplify the regulatory regime for smaller banks here in the UK. This comes after Chancellor Reeves asked regulators for ideas as to how to get the economy growing in a meeting last week. Speaking of the Chancellor, according to reporting by the FT, it looks like she has somehow stepped in. I haven't read the article, so do forgive me on this one. It looks like she is stepping in the auto finance mis-selling scandal or issues, whatever you want to call it. We have seen a bit of upside in UK banking shares this morning on the back of that. Reeves also, according to the FT, backing those plans for looser limits on mortgage lending, which I'm pretty sure we spoke about last week and will likely end in tears. Meanwhile, Keir Starmer, he's keeping himself busy as well. He is apparently set to back plans for a third runway at Heathrow, back plans to bring Gatwick's second runway into more regular usage, and back plans for an expansion of the terminal at Luton Airport, which is possibly the worst place in the world. And yes, it may surprise you, I have actually been there. I would also say that, it's all well and good the government saying, yeah, we'll build a third runway at Heathrow. I think UK governments have been trying and failing to do that for about 2 decades now, so I will not be holding my breath for any of those to happen. And last but by no means least, also here in the UK, we had the latest employment figures out this morning. Unemployment rising to 4.4% in the 3 months to November, in line with market expectations, although again, take it with a pinch of salt because the data is still very unreliable, despite news yesterday that the ONS have now spent 40 million quid in trying to revolutionise the labour force survey. The data still isn't worth the paper that it's written on. Meanwhile, average earnings, well, they're clearly soaring at the ONS. I think they're soaring more broadly as well. Average hourly earnings, including bonuses, so overall pay, that rose by 5.6% on an annual basis, the fastest pace since May of 2024. Regular pay also rose 5.6%, the fastest pace since last June. Despite that, it is the higher unemployment rate and the fact that UK payrolls fell for the 10th month in the last 12 that participants are focusing on this morning. We have, as a result of that, seen a dovish repricing of Bank of England policy expectations. The market now seeing about a 90% chance of a 25 basis point cut in February. That was about 85% yesterday, and also pricing about 65 basis points worth of cuts by the end of the year. And that's up about 5 basis points compared to where we were yesterday. And for now, that is all from me.
Well, thank you very much, Mr. Brown. Just whilst we're talking about the UK, just before I start reading through the sorry, 1 second, let me clear my throat.
I'm rather hoarse this morning.
Yeah, I don't know what that's about. It's going to get worse as well, I believe. Yes, obviously, before I start rattling through Zach's awesome list of headlines from the overnight news roundup, which we posted up into the top of the spaces. As you can imagine, many of these are related to Trump, but there is one from Chancellor Reeves, UK Chancellor Reeves, so I'll get that one out of the way, bearing in mind you've just been talking about the UK. So that's that UK Chancellor Reeves will meet with JPM CEO Jamie Dimon and Goldman Sachs CEO David Solomon this week as she seeks to persuade investors to plough their cash into the UK. Yeah, well, in that case, change your policies, love. Anyway, sorry, what? Anyway, macro news, obviously, as you could expect, many of these headlines are Trump related. So this, but we're trying to kind of try and keep it slim. Obviously, check the full overnight news roundup out if you want a full list. So I picked out some key ones. Well, in my opinion, they're key ones. So we mentioned tariffs just now. Well, Michael did. Trump suggested that the US could impose significant tariffs on China if they don't approve the TikTok sale. Suggests they could be up to 100%, but also said he's throwing it out there as a possibility. So in line with what Michael said, very wishy-washy at the moment. No hard numbers or no hard information to go on. Trump issued an executive order that would direct the Attorney General not to enforce a TikTok ban for 75 days. Trump said a deal where the US gets half of TikTok and TikTok keeps the other half is one of many ideas. So, yeah, again, very wishy-washy, very little fact. Trump, that ties in with Michael said, not ready yet for the universal tariff ideas. Michael's already covered that. Trump laid out a sweeping plan to maximize oil and gas production, declaring the national energy emergency, stripping away regulations, withdrawing the US from the international pact to fight climate change. The White House went on to say that the Trump administration will prioritize development of Alaska's LNG potential, including the permitting of all necessary pipeline and export infrastructure. Regarding the EU, Trump reiterated a call for the EU to buy more American oil and gas if the bloc wants to avoid tariffs. And in regards to the EU finance ministers agreed to stay united in their approach to the new US administration, and a more competitive EU economy was the best protection from potential transatlantic economic challenges. Things with when this happens with the EU starts, when they come out and say, yes, we're going to be united, give it a week and then you'll see all the individual start making their own comments, especially
they haven't had a summit about it yet,
exactly. Get long EU, well, Brussels caterers, you know the trade that never loses. Also, this is all well and good saying about EU finance ministers, staying united, but we already know that France and Germany don't have functioning governments, so good luck with that one. Sorry, pardon me. China's record coal purchases last year were driven by an increase in supplies from Australia and Mongolia, while Russian cargoes actually fell. So that's counter to what we've seen some pundits saying. Some geopolitical headlines. Trump said that Ukrainian President Zelensky wants to make a deal and end the war with Russia. He said he's not confident in the Gaza ceasefire. That's Trump rather than Zelensky saying that. Trump said he thinks Denmark will come around to giving Greenland to the US. Now, obviously, we know that's bollocks. They won't give the Greenland to the US, but there's potential that Greenland might be aligned more with the US going forward. But very clear that that's aligned and not bought by. Trump said he will meet with President Putin, but no date has been given yet. Putin said he's ready to talk peace with Ukraine and Trump, or in Ukraine with Trump. Sorry. And a few on the equity space. Nvidia's latest, this one for Tom Talks Cars, he is listening, so hi Tom. Nvidia's latest high-end gaming GPU, bear with me here, that's not what it's called, I'm just saying bear with me. The RTX, imagine if it's called the bear with me here. The GeForce RTX 5080 and the RTX 5090 are in short supply, with prices in some areas already doubling. Supplies are expected to remain tight until until late Q1 or Q2.
Can I just say, actually, on that, obviously, computer equipment is my specialist subject on this program. Whoever is in the NVIDIA marketing department, I mean, look in the mirror, for God's sake, come up with something catchier. Who can remember that?
Mate, I struggle to remember my own name, so pass.
Well, it's only 4 letters.
Oh yeah, well, I've got 2 middle names.
We're really going off on a tangent now, aren't we?
The culture and agriculture. Anyway, moving on. Trump took aim at EVs, revoking a 2021 executive order signed by Biden that sought to ensure half of new vehicles sold in the US by 2030 were electric. Chinese property developers outperformed on Tuesday after Country Garden returned to trading, having pledged to clinch a deal with creditors on a debt restructuring plan. TSMC announced post-earthquake structural inspections have been completed at all sites, confirming that the structures are safe and operations are gradually resuming following the earthquake in Taiwan on Monday. And finally, in the mining sector, BHP boosted copper production during the fiscal first half as it raced to meet demand for the metal using key technologies ranging from EVs to power grids. And that's the luck from me in Somerset. Back to you in the studio.
Good stuff. Thank you, Ryan. Right, in terms of the day ahead then, a few bits and bobs worth bearing in mind on the data and the speaking docket, although, of course, do recall that it is day 2 of the Trump administration, and I think that is likely to very much steal the show in terms of what participants are focusing on. Nevertheless, in terms of scheduled events, things kick off at 10 o'clock this morning with the latest ZEW sentiment surveys out of Germany. The expectations metric expected at 15.1 in January, down from the prior 15.7, while the current situation metric that's seen holding steady at minus 93.1. So still very, very grim and gloomy indeed for Europe's largest economy. Moving into the remainder of the day, we have CPI figures due from Canada this afternoon. Headline inflation seen having risen by 1.8% on an annual basis in December. That would be a marginal slowdown from the 1.9% that we saw in November. The market discounting around a 3 in 4 chance that the BOC deliver a 25 basis point rate cut at their first meeting of the year next Wednesday. And then at 10:15 this evening, we have the latest CPI figures due from New Zealand. Also expecting a marginal slowdown there to 2.1% on an annual basis in the final 3 months of 2024. That would be down from the 2.2% previously. In terms of market expectations for the next RBNZ meeting on the 19th of February, obviously still a month or so away, but the market nonetheless pricing around an 80% chance of a 50 basis point cut from the RBNZ at that meeting, with the balance in favour of a more modest 25 basis point move. In terms of Other things to keep an eye on today. Speakers, we hear from the ECB Centino this morning, although, of course, he is due to be leaving the Governing Council in July, towards the middle of July. So do just bear that one in mind. He is also typically rather dovish. And in terms of earnings today, earnings season, of course, continuing. Before the market open, we are due to hear from 3M, who are a relatively useful bellwether stock. And then after the market close, we're due to hear from Netflix, where the options imply a pretty chunky implied move of up plus or minus 8.5% in the 24 hours following that earnings release. And lastly, we also hear from United Airlines, so we'll see whether they take off or crash land in post-market trade. And that is pretty much a lot for this morning.
Thank you, Mr. Michael Brown. Sorry, I don't know what's come over me. Oh, stop it.
It's all that countryside air.
Well, it probably is actually, but you're not wrong. Thank you for that. Big shout out to Cam, who does the Crypto Blast that will be coming along shortly. Also, obviously, to Zach, who does our overnight news roundup, and all the rest of the PIQ team, and also the listeners. Just a bit of somber news because it impacts possibly our schedule tomorrow. Unfortunately, and it's kind of the reason why I'm in Somerset, it's my aunt's funeral today. So depending on the wake, and it is a very scheduled to be quite a heavy drinking affair, I might not be around for tomorrow's blast, but I will keep you in tuned in the morning. But yeah, if I can make it, I will, but no promises because Scrumpy is a powerful drug. Well, I'm just being honest. Yeah. But yeah, anyway, moving on. Listeners, thank you so much for listening. As always, thank you, Mr. Michael Brown. You aren't going anywhere. You're not being replaced. I'm going to have words with Mr. Rich Bernard. And yeah, hopefully see you tomorrow. If not, Wednesday. No, Wednesday is tomorrow. Thursday.
I will see you soon.
See you soon. That's it. Let's see you soon. Cool. Right. Thanks.
Bye-bye. Oh.